Hello everyone, I'm Noah Lui, RHB Bank's Head of Investors Advisory. Thank you for tuning into our Quarter 2 2023 Fund Discoveries Idea Podcast. Before we start, let's review the industry fund flow in the first quarter of this year. Quarter 1 has shown material inflow in China Equity Fund, which has combined near to 700 million net inflow, appear to show a lot of investors start to invest in this fund. In terms of fixed income space, we see high increase of corporate fund flow from money market to institutional class bond fund. This rides on the lesser tax benefit from money market fund, while investors move on to capture potential upside from local fixed income market. In terms of local Malaysia assets, there is a shift from Malaysia Equity Fund to Malaysia Mixed Asset. We continue to monitor changes in investor preferences in local equity market, with recent announcement of China investing an estimate of 170 billion in Malaysia. Within equity funds, we have seen shift from developed market equity to emerging market equity fund in the first quarter. First one I wish to introduce is TA Global Technology Fund. The fund itself focuses its investment in mega cap technology stock globally, mainly focused in US equity market. The fund has record to outperform the broad market index, including both S&P 500 and Nasdaq indices. Despite choppy market conditions, due to concern on financial sectors in US, the fund has appreciated by close to 20% in the first quarter of the year. Considering the downside bias performance in the previous 3 quarters, there is a potential for catch-up to be done by the fund. Despite global fund, the fund manager aims to achieve asset return by investing into any underlying which offers higher potential upside as shown from its investment into China technology stocks such as Alibaba and Tencent. Alibaba share price jumped after announcing its business to be split into 6 business groups, each with the ability to raise outside funding and go public, while Tencent shares soar as fourth quarter profit jumps. Quickly moving to emerging market, the heavyweight exposure of this region is China. IMF has forecast that both emerging and developed Asia to be highest in 2023, which is also the highest rebound for this year in terms of GDP growth. As market is expecting US dollar to depreciate in future, historically, a weaker US dollar will benefit emerging market equity. RHB Asset Management continue to hold a positive view in Chinese equity market, and this is in line with other major fund houses in the market. China reopening story is not over yet. It's not just about people traveling within China or out of China, but it's also about China's opening its border to foreigners. Combined with the already high traveling activities in China, there is potential to see such activities and optimism to be reflected in China's corporate earnings in the quarters to come. Based on Bloomberg's best estimate, there is upside potential of between 20 to 30% in Chinese equity market. Investors may consider both China onshore or offshore fund, for example RHB Big Cap China Enterprise or RHB China A Fund. Despite its rebound in the past 6 months, the fund still has room to catch up from where it was 2 years ago. Referring to both of its latest fund fact sheet, both funds has different exposure which offers good diversification to investors' investment portfolio into China. Another potential solution is to invest into RHB Strategic Income Fund 12, which is a capital repayment fund with underlying that offers investor opportunity to invest into China equity market focusing on green energy themes. The fund has a limited offer period closing latest by 11 May 2023. Investor who wants a different diversification into Asian Emerging Market Fund may consider Principal Asia Pacific Dynamic Income Fund. The fund has exposure in both India market plus the rest of the listed companies that benefit from recovery in Asia Pacific market. While clients who want to have a more prominent exposure in the highest growth within Asia Pacific market may consider Manulife India Equity Fund. We have shared our view on this fund in our previous fund discoveries. We remain positive on both equity and fixed income asset over cash. Despite higher fixed deposit rate at the moment, Bank Negara Malaysia has paused its rate hike in the past few meetings. We may potentially see rate cut following US Fed by end of 2023 or early 2024, which means investor is facing potential reinvestment risk in fixed deposits, which will be renewed at the lower rates in future. Lower interest rate will benefit bond prices. RHB American Income fund portfolio has yield towards of 6.88%, investing into diversified portfolio of fixed income instruments with more than 1,000 holdings. Its highest exposure is in US Treasury bond, which are rated AAA by Fitch. The fund's average duration is 5.31 years, which will potentially benefit from potential rate cut in future. Fund's average credit rating is A-, which also means averagely are investing into investment-grade bonds. Investment is always forward-looking. Bond market has shown recovery in its prices in the recent quarterly performance. With further strengthening of the rate cut view in US, there is potential for more price recovery in this fund. Using 5 years US Treasury yield as a gauge, there is still a long way for recovery in US fixed income market, which may then benefit the fund's performance. Thank you for listening to our Fund Discoveries idea. Please engage our relationship manager if you wish to know more about other funds on our platform. While visit RHB Merge website to view our other money chat or podcast series. Thank you for listening.